Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. Darden investors are pretty happy recently. The stock just off all-time highs that we hit yesterday into their earnings event. Landon, is this one of those things about, value at this point? Because I was looking up before the show, a Big Mac value meal at McDonald's is like $12 here in Chicago. I mean, you can get like never-ending pasta and breadsticks and salad for $12 or $13 at an Olive Garden. I mean, this kind of makes sense that, hey, these restaurant stocks, whether it's Darden or Brinker or some of the other ones that are in this space, are doing better than maybe the fast food chains at this point, just due to the value concept, right?
It is. It's crazy. And let's not understate the euphoria that those investors have right now. I mean, if you look at this stock chart over the last year, I mean, this thing has gone from 135 to 223. We're talking about a restaurant stock. This isn't a tech stock. It's been basically straight up. I don't think that they've had a week of, panic, really. I mean, and you can actually pick out the three earnings reports, the last three earnings reports. They're all gap up. So this has been a great year to own DRI. But you're right. The value prop is insane. I mean, it is, for whatever reason, there is a very small difference in price between fast food and fast casual and sit-down dining like these. So, I think that, people are recognizing that and they're starting to move over. Now, it's not all restaurants. I mean, if you look at, Darden, they are, they're doing really well in some of the categories like web visits, for example. So I think that they're plus 12% right now in web visits. Texas Roadhouse is the one that's got them beat. Otherwise, they're doing really well. I mean, they're beating Cheesecake Factory and Cracker Barrel. They're both negative on the year. And so, Darden is really strong. And what we're seeing is that, when you look at Olive Garden, Longhorn, Cheddar's, their web visits are up, their app visits are up, and that's telling us that people are planning visits. They're placing orders online, they're interacting with promotions, they're just using the software more, so that means they're going to the restaurant more. And you can kind of see the breakdown here between the three. Longhorn is actually providing the largest percentage increase, Olive Garden the lion's share, but still Longhorn is driving the growth here, but both of them are very strong. But overall, the app usage is plus 20% on a year-over-year basis. That's really, really high. And what that's higher order frequency, that's more loyalty redemptions, that's better targeting for limited time offers, and all of that sort of leads to same-store sales growth. And so what they're doing is they're taking people who are familiar with their products, familiar with eating there, and just kind of poking them and saying, come on back, we got these promos, come on back, here's some deals, come on back, the prices are low. And then when you go to McDonald's and you pay like you're talking about $12-13, and then you look at your Olive Garden app, you're like, why did we go to McDonald's? So I think a lot of people are kind of having that realization right now. And it's obviously very good for the company. Longhorn just reported same-store sales last quarter of plus 2.6%. Olive Garden and Chewy they've got a new point of sale system going in that's going to create better efficiency. Yard House and Cheddar, they're testing smaller stores that cost 15% less to make, but are actually on par with the same-store sales of the larger ones. So, they're innovating and they're trying different things. They're into tech, and it's just a restaurant company that's leveraging technology and advancement and trying things that most of them aren't, and they're having a lot of success. And I think that people see the value and they're becoming more and more loyal to Darden.
Yeah, Landon, it's amazing. Obviously, the flagship of this restaurant company is Olive Garden. But Longhorn Steakhouse that you mentioned in your presentation is quickly becoming that darling in second place. Now, they've got some higher end steakhouses, but this lower price point seems to be doing well. And the other thing, Uber Direct, their relationship with Uber Direct, that's probably, in my opinion, driving a lot of that web traffic that you're talking about. And this is just, we have this company on once a quarter, and they just continue to manage their business through good markets and bad markets extremely well. You know what they do? They maximize. If it's a rough market, they maximize. If it's a great market, they maximize that too. And these two names We knew Olive Garden was good, but Longhorn Steakhouse is the one that's really impressed lately. And if any of these can be delivered to your house, Landon, even better.
Exactly, absolutely. And they, Olive Garden's they've got a promo that they're running, buy one take one, where you buy a $15 entree and you get one to take home for $6 and eat it the next day. I mean, it's insane if you look at the value. And honestly, one of the things that it makes me think of is, when I have friends that are talking about starting a restaurant, because, they know restaurants but they're going to start one. I'm like, you're competing against people like Olive Garden and Texas Roadhouse and Longhorn. It's like they are pros, and just like you said, they maximize whatever they're into. And that's why they're able to do so well. So this is a very tough space, entrepreneurial speaking, but you don't want to compete with a guy like Darden, and so I think they're kind of showing us why is in their execution. And right now, they've got the digital growth, they've got the margin discipline, and they've got very strong consumer demand. And I think a lot of it, Tom, comes back to, like you said, it's that value. I mean, it's $15 meal and a $6 take home from Olive Garden. That's crazy. Plus, while you're there, just like you said, you can eat breadsticks and salad all day long. And then all of a sudden, why am I eating at McDonald's? So, yeah, absolutely great value play. This is one that I think is not on a lot of people's radar. Like you talked about, Kevin, we talk about it once a quarter. It's not a sexy name. It's not exciting. But when you look at the stock chart, you look at the execution, it can get really exciting. I mean, again, you're closing in on nearly doubling over the last year, and we still think there's more upside. Now, I would always argue that if the stock is this high, the bar is going to be really high. Investors are expecting a lot out of this earnings report. But all of the data that we have is saying that this price is justified, and actually it could go higher on this earnings report. So we've got a strong earnings score of plus 54 going into this one, pretty bullish on it. And it's not only a good one to hold long term, but I think to trade on this earnings report as well.
Yeah, that's it's not surprising because the stock has followed a lot of the trends that you guys seen and the data that you guys have. But I look at the stock sitting at $223 near all-time highs. So that scares me. But Landon, as you mentioned, that's probably part of it is the fact that, hey, you know what, McDonald's and Yum Brands, that was a different level and different competitor to Darden, to Brinker, to some of these other restaurant chains that are fast casual. But now that gap is crushed. And if you look at McDonald's, you look at Yum Brand stock, those things have fallen pretty sharply over the last couple of months here. And, that's now the competitive landscape, right?
Yeah, it is. And you know what? I'm a big believer in the pie growing, and we can create wealth and all that. But when it comes to restaurants, it's a pretty much dog eat dog world. And if there's a loser, there's a winner. And I think fast food is the loser right now because of the prices. It used to just be kind of programmed in everyone's head that you could just drive through somewhere and it's going to be pretty cheap. But that sticker shock is starting to set in, and it doesn't take too many visits to a place like Longhorn Steakhouse or Olive Garden or one of those to say, wow, this is just a little bit more. You can also do takeout. You can also do delivery. Maybe we need to move things over. And so as McDonald's and those other companies lose, companies like Darden are well positioned to pick up those customers, and they've done that so far.
Yeah, you've seen the partnerships that they've formed with Uber Eats and DoorDash over the last couple of quarters, probably helping send this stock up. All right, great stuff, great data. As always, Landon, appreciate it.